So one of the components of that model is actually a tapering effect. So basically, one of the solution is, or one of the parameters is how many people we are going to red pill at hand, right? And that is another thing that you have to understand. The end means not the end of Bitcoin, but actually the new beginning, right? So when Bitcoin will be adopted by big nations, when it will be the world standard, the power law ends, because it's like describing the growth.
Neuroscientist astrophysicist Giovanni Santostasi devised the Bitcoin power law model, which claims price and time may predict Bitcoin price movements. In recent weeks, MicroStrategy Executive Chairman Michael Saylor announced at a Bitcoin conference that all Bitcoin models are invalidated, and popular Bitcoin analyst Plan B called the power law model too high and unstable. Noting that Giovanni's time power law model predicts diminishing returns over the year, while his Bitcoin stock-to-flow model predicts exponential returns, Bitcoin-supporting commercial lawyer Jor Laurie blasted the approach on Twitter. Tweet says, "Let's ignore decades of academic studies showing that power laws are expected in many assets, nearly invariably break down over time, are unpredictable, and occur naturally. Stock markets are complicated systems with changing user growth, as these criticisms indicate." Giovanni and others, including mathematician and Bitcoin enthusiast Fred Krueger, believe the power law is still true and the most scientific technique to anticipate Bitcoin's future. Saylor claimed that understanding Bitcoin will shatter all your models and render them meaningless. He predicted Bitcoin growth. Krueger counters Saylor's anti-model arguments by arguing the Bitcoin power law can anticipate Bitcoin's price increase over the next decades. Saylor claimed his 24% estimate is rough and cannot be modeled using power laws. Godzilla Krueger addressed the Saylor's comments regarding his 15-year-old models. Bitcoin will grow 24%. Rough CAGR model. A recent interview with Simple said that the CAGR is closer to 44%, and the CAR will drop to 34% after a decade and 24% within 2. Bitcoin Giovanni discusses why the power law approach is better and how it yields 64 to 150x Bitcoin gains over 15 years. Like, subscribe, and enable post notifications for more videos like this.
It's not a model now, it's a full theory, because I'm going to explain in a moment why it's a full theory and why it goes beyond being a model. Has been tested by, right now, not just me and Fred, but several other people. And yes, we have PhDs, and actually this should give you confidence, because I'm pretty tired of this bullshit, because it's a huge stinky pile of bullshit where people say, oh, you are expert, we don't believe in experts. Okay, next time that you go and look at a football game, go and look at a bunch of children, because they are not, experts, so you should not like professional baseball player. Why do you like baseball players, right? Because they are professional. So being professional is good. You should actually not trust them, but, listen to them and see what they have to say, because maybe you learn something. Now, with Bitcoin and with anything science related, you can always take the time, go and verify yourself. And there are actually hundreds of people that did that. It's not very difficult. We are not talking about some very sophisticated mathematics where you have to be trained over many years to learn it. It's not like that. It's actually high school mathematics. In some countries like mine, we study logarithms in middle school, okay? So it's very simple mathematics. Now, in terms of all the tests that we did, and at this point there is, that I know, Fred Krueger, there is his friend, astrophysicist Stefan, there is Sina, that is a professor in finance, maybe some other people that I don't remember. There are APSK, that is an engineer. I don't remember if he's a PhD or a master engineer, but he's a very, very professional person. There are more and more professionals that are actually doing a lot of statistical work. Let me give you an idea of a stat work. One of the first things is to calculate this regression coefficient. So you calculate this quantity, that there are some interpretation, but one of the possible interpretation is how much of a behavior of Bitcoin, notwithstanding going up and down, etc., that is part of the behavior of Bitcoin, but the general trend can be explained by that straight line that you guys see by looking at this R square. R square is a statistical quantity that you calculate that is very, very standard. It's one of the things that everybody does. And Fred was talking about him doing it in financial market. I did it in 3 different fields, that is astrophysics, neuroscience, and finance. And we always use this quantity. This quantity says that 96% of a behavior Bitcoin can be explained by that straight line. That number, obtaining a 96% or 0.96 R square, is almost, in fact, I would say it's unheard of in the financial field. You don't get that. It's unbelievably crazy, okay? I made a model, trading model that lasted a few months, because when you do these trading models, you maybe find a little bit of alpha or a little bit of correlation. And even at 0.2 correlation, it's so silly, that gives you an advantage. This is 0.95. It's never heard. In fact, I can tell you, when I was working in medicine, when I was working in neuroscience, in neurology, having any type of behavior that I found, I observed, even I have a patent based on some technology that I developed in neuroscience. If I was getting 0.7, 0.5, 0.75, 0.8, it was extraordinary. We publish a paper, a lot of medicine papers, a lot of biology papers. If I get a correlation of that type, is considered miraculous. So almost just in physics, where yes, in physics we get 0.999, stuff like that, but because we're dealing with particles, not people, a behavior that is based not just on people, because of course there are machines involved in.
Giovanni says that scale invariance is one of the most misunderstood parts of the power law model. However, it is also one of the most useful parts, as it can be used to make predictions about any system controlled by power laws, in this case Bitcoin. Giovanni thinks it will take about 10 years for Bitcoin to reach $1 million per coin. The astrophysicist also thinks that scale invariance helps us understand the role and importance of events like the recent approval of several spot Bitcoin ETFs, which has allowed thousands of individual and institutional investors to invest in the leading crypto asset. According to Giovanni, scale invariance tells us that these events will not have a big impact on Bitcoin's price trajectory, but they are critical for the asset to continue its scale invariant growth. This means that the Bitcoin power law doesn't change because billions of dollars are now flowing into Bitcoin through ETFs. The model has always included the growth of the network. In an interview with Simply Bitcoin, he talked about this idea. Giovanni recommends an aggressive strategy for younger Bitcoin investors with a long-term view. He thinks this strategy will return 100 to 150 times your initial investment in 15 years. Here are more interview clips.
In the network, this is one of the things that make people forget that we are talking also about energy, we are talking about machines, we are talking about algorithm. This is why Bitcoin is different from everything else. It makes sense, right? It's not that we are coming up with something idiotic that doesn't have some real physical reason to exist. So it makes sense that Bitcoin is different from anything else. But this type of statistics are unheard of. Now, what do you do with this statistic? One of the things you can do, but for example, I posted online about this, but also we wrote an article about this, Sina did. You can take a portion of the data. So for example, let's say you take just 50% of the data, and then you say, and this also answer the people say, oh, it cannot predict the future. Yeah, you can do it also in this way. You can pretend to go back in the past. You can say, I'm just going to use 50% of the data, and I'm going to see if the prediction of this 50% is consistent with the other 50%. This is something that is done all the time, even to train, like for example, machine learning or AI, etc. You take some data, use it as what is called training data. You train your model, you show what the model predicts, and then you use the next part as your kind of future, because you didn't include it in your model. And Sina did stuff like that many times. He's a finance professor. He has a company that consult and people pay him to do this type of work. And he literally say, and Fred can verify these words, I never saw anything like this in the financial world. These are his exact words, okay? So yes, people did a lot of statistical tests. Now, what also I did, I went away from fitting lines, because that is another criticism of people say, oh, you're fitting some line. I went away from that, and they say, okay, do we have something that could explain this behavior? And I went back all the way to thinking about Bitcoin as a network. And they say, I found this literature where we had equations, the general equations that explain how a network works. Now, these equations include exponentials, S-curves, they can include Weibull curves, they include very, very, very general models, any possible solution you can imagine of the behavior of a network. Then I fed the addresses, okay, so something unrelated to the price. I fed it the addresses, and then I said, okay, solve these equations with whatever solution you like. I didn't say find a power law. I made a simulation, and the goal was to find the best solution that could describe the behavior of addresses.
A recent tweet by Krueger says it all about the power law model, and what it is supposed to predict here is my list of what we can learn from the power law model. Bitcoin is growing at about 43% per year, but that growth will slow to 30% in 10 years. The standard deviation of this growth is plus 2x, going down to 0.5x in a year. You can go over 2 standard deviations to the upside, like in December 2017 and December 2020, but you've never gone below 1 standard deviation on the downside. The model says that 2022 is possible. It says that we should lighten up if we reach 200,000 this year, and a lot if we reach 400,000. It says that we should add more if we reach 50,000 by the end of 2024. The model doesn't think that we'll reach 1 million in 4 years, even with ETFs. It doesn't use stock to flow or scarcity to explain anything. If you compare this plan to others, especially Plan B stock to flow, it doesn't matter what the Fed does with interest rates, debt, or macro. The power law model is definitely conservative. Which of the models do you like best, or do you agree with Saylor's claims that all models have been shown to be wrong? Please share your thoughts and comments in the section below. Also, don't forget to like the video, subscribe to the channel, and turn on post notifications to see more videos like this.